This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Reversal of fortune. Blackberry put the smart in the smartphone, but today its shareholders feel dumb as the company ponders the dreaded strategic alternatives. So how can you tell if a company you own is about to lose it?
Fed watch, a big week for big data. And the numbers that are released could impact what the central bank does next and the market's next move.
Planes, trains, and hyperloops. No, it's not a cereal. It's the future of travel, according to one entrepreneur. And it could mean getting from Los Angeles to San Francisco in under 30 minutes. We've got that story and more tonight on Nightly Business Report for Monday, August 12th.
Good evening, everyone. Remember when the Blackberry was the must-have device for executives? Everyone wanted one, and if you had one, you couldn't put it down. Well, not anymore. BlackBerry's been passed by better phones from Apple, Samsung, and others. And today, the company waved the white flag. The board of directors at the struggling smartphone giant announced that it's exploring so-called strategic alternatives, and that includes possibly partnering with another firm or taking the company private or even selling it off to the highest bidder. John Fort has the latest on the possible future of BlackBerry.
A humbling moment for a once proud brand. Blackberry, the company that first popularized the idea of a phone that could do more than make calls, the company that added Alicia Keys as a marketing executive in January, says it's pursuing strategic alternatives, a corporate euphemism for looking to get bought or taken private. It's not hard to see why. The momentum in the mobile market belongs to Samsung and Apple, Android and iOS. The latest data from IDC shows that worldwide, BlackBerry had just 3% market share in Q2, down from 5% a year earlier. For every one BlackBerry shipped in Q2, more than 27 Android phones moved. And things aren't about to get easier. Apple's new iPhone lineup will take a bow in about a month. Just before then, Google will start selling the Moto X smartphone. That means the market will be even more crowded at the end of the year for new BlackBerry phones that don't seem to be catching on as quickly as many hoped.
BlackBerry's got a tough situation on its hands, and it really is a lesson that all developers ought to pay close attention to, which is that markets change really fast and that only the paranoid survive.
The question might be whether paranoia will even help BlackBerry at this point. Going private could be a good option. The company has a market cap of about $5 billion and about $3 billion in cash and equivalents. But trying to go private comes with risks. Just ask Michael Dell. The uncertainty around that kind of transaction could send BlackBerry's fortunes spiraling. Whatever BlackBerry chooses to do, the clock is ticking. The biggest buying season for smartphones starts in about 6 weeks. For Nightly Business Report, I'm John Fort.
Coming up a little later in the program, what are the warning signs that a company you own is in trouble and falls out of favor on Wall Street? We'll get some answers from a successful business strategist.
The technology blog All Things Digital is reporting what John Fort just referenced, namely that Apple is expected to unveil a brand new redesigned iPhone on September 10th. There's speculation that the newest iPhone will have a larger screen or we'll see a lower cost model made of plastic for consumers in emerging markets. There's even talk about fingerprint recognition software in those new handsets. Apple, as usual, declined to comment. Meanwhile, a few acquisitions to tell you about, beginning with Dole Food. The fruit and vegetable giant agreed to be taken private by its chairman and CEO, David Murdoch, who already owns 40% of the company. Back in June, Murdoch offered $12 a share for Dole, but finally struck a deal after sweetening his bid to $13.50 a share. That values the company at $1.2 billion. That's a lot of bananas. Then there's Pinnacle Foods. It owns popular brands like Duncan Hines and Vlasic Pickles, and it is now acquiring Wishbone salad dressing from Unilever. The price tag there, $580 million. And finally, there may be a bidding war to acquire the legendary piano maker Steinway Musical Instruments. That's after an unknown bidder came up with an offer of $477 million, topping an earlier buyout bid that was already accepted from the private equity firm Kohlberg and Company. Shares of Dole, Pinnacle Foods, and Steinway all higher on the day.
Well, those deals did little to inspire investors to buy stocks. On Wall Street, stocks were little changed. The Dow lost 5 points. The Nasdaq rose almost 10, getting a lift from shares of Apple, which rose nearly 3%. And the S&P 500 was down about 2 points. Mining companies were some of the biggest gainers today, and that gave a boost to the price of gold, up more than $22 an ounce, a gain of nearly 2%.
Good news out of Washington, sort of. The government reported a nearly $98 billion budget deficit for the month of July, but that means Uncle Sam is now on track to post the lowest annual budget shortfall in 5 years, more than a third lower than last year's gap. Now, the reasons for the shrinking deficit: slow but steady economic growth, higher taxes, less government spending, and the turnaround in the bailed-out Washington-run mortgage giants Fannie Mae and Freddie Mac.
Besides that budget deficit report, this will be a big week for fresh data about the U.S. economy. Those reports will be closely watched not only by investors, but by the policymakers at the Federal Reserve as they decide if and when to begin tapering their economic stimulus program. Steve Leisman tells us what's on this week's economic calendar and which reports are most important to Fed Chairman Ben Bernanke and company.
Good evening. A big week for economic data that will go a long way towards figuring out whether the economy is strong enough for the Federal Reserve to ease back on the support that it is giving. We'll get a read on the consumer with July retail sales tomorrow morning, and economists are looking for a modest but still healthy 0.3% gain. Later in the week, Wall Street looks for relatively tame inflation numbers, both from producers and consumers, and for the number of Americans filing for jobless claims to remain low at 335,000. That's just a bit above the level from before the recession. And then on Friday, we'll learn how much new home building has been hurt by recent higher mortgage rates. Economists look for July housing starts to come in with a big gain at 910,000 at an annual rate. Fed Chairman Ben Bernanke will be watching all of this closely. He's indicated the Fed could reduce its monthly purchases of bonds. They're designed to help drive down long-term interest rates. That could happen as early as September if the economy is in good enough shape. Already, the second quarter looks healthier than originally reported after revisions to the data from the government. So better economic data this week through September, when the Fed meets, could put the Fed on course to ease back on the support it's giving the economy. For Nightly Business Report, Steve Leisman.
An update on a story NBR brought you a few weeks ago. Federal commodities regulators have sent subpoenas to a number of companies as they investigate allegations that aluminum owners and warehousing firms inflated metal prices by moving supplies from warehouse to warehouse, thereby keeping it out of the open markets. Wall Street's Goldman Sachs Group, along with its wholly owned Metro International Trade Services unit, which stores metals like aluminum, copper, and tin, were among the companies receiving subpoenas related to the inquiry by the Commodities Futures Trading Commission.
General Motors is rethinking its business operations in South Korea. Reportedly, GM may have already begun shifting manufacturing out of that country because of sharp increases in wage costs and militant unionism. South Korea accounts for about a fifth of GM's global auto production. Meanwhile, the company is expanding manufacturing operations in China to meet growing demand there.
Coming up, a small group of companies was hit hard by the housing crash, but the recovery is bringing them back from the brink. And now investors are taking notice. But first, let's take a look at how the international markets fared today.
One industry hard hit by the housing crash: private mortgage insurers. Two big ones went under and the rest were left bleeding cash. But now investors are taking note. The housing recovery is breathing new life into this industry, and some new players are worth watching. Diana Olick has that story.
When housing came crumbling down, the private mortgage insurance industry was left holding the bag. 4 companies lost a combined $20 billion, and they were the survivors. Now these companies just posted their first quarterly profit in 6 years.
Delinquencies are down, which has helped, and the companies have recapitalized, the main public companies, Radian and Magic. At the same time, FHA is reducing its role in the market, so this has given them significant growth opportunities. And so the companies have basically reversed their position, and they're all starting to show modest profitability.
Two more have entered the market, and together the six wrote nearly $49 billion in new business in Q2, up 27% from the previous quarter, according to Inside Mortgage Finance. Of the publicly traded firms, MGIC, Genworth, United Guarantee, a unit of AIG, reported positive income, with Radian still trying to break out of the negative. Privately held Essent, a newbie to the market, is coming on strong with $10 billion in new business through the first half of the year, up from $3.6 billion a year ago. The latest to the group, National Mortgage Insurance, plans to go public and just made a $5 billion deal with Fannie Mae to insure pools of loans.
The redefault rates on some of those programs have increased. But what we would argue is that without those programs, it would have been a lot worse, because most of these borrowers would have been delinquent and would have foreclosed and been a payment for the MIs.
While the mortgage insurers didn't get a government bailout during the crash, they did benefit from the housing bailout, specifically the government refinance program for underwater borrowers and the loan modification program. Private mortgage insurers have now climbed back to about 1/3 of the market. They could see even more gains, though, should Congress finally figure out what to do with Fannie Mae and Freddie Mac and bring more private capital back to the table. For Nightly Business Report, I'm Diana Olick in Washington.
A small biotech stock makes a big move lower, and that begins tonight's market focus. Vical says it will stop development of its cancer therapy drug for advanced melanoma, the deadliest form of skin cancer. A late-stage trial failed to demonstrate that the treatment was significantly better than conventional chemotherapy. The CEO says the company will now focus on its infectious disease vaccine. That sent shares plummeting down more than 57% to $1.53. And Yum Brands reported a 13% drop in July sales in China. The parent company of KFC and Pizza Hut posted a steeper than expected sales decline in those stores after a food safety scare and a bird flu outbreak. China is the company's most important market, generating more than half its operating profit. Shares were up fractionally at the close to $74.47, but then, as you see on that chart, they fell after hours.
Farm equipment stocks getting a boost from the crop report today. The Department of Agriculture cut its forecast for the size of the corn harvest this year. And so prices shot up for commodities like corn and wheat. Investors seem to be buying into the idea that farmers are more likely now to buy new tractors and combines when commodity prices rise. Shares of Deere rose 2% to $83.38, and Agco was up more than 1% to $57.45. And Cisco, this is the food distributor, was the worst performing stock in the S&P 500 today. Shares came under pressure after reporting quarterly earnings that tumbled 8.5%. Now, the company gets most of its revenue from supplying food to restaurants, and Cisco's CEO said today its customers are struggling as consumers are not dining out as much. The stock dropped more than 5% to $32.99.
Well, the boardroom brawl at the retailer JCPenney prompted company directors this weekend to hold a rare Sunday meeting by telephone. At issue, what to do now after activist investor and Penney's largest shareholder, the board member Bill Ackman, went public last week with his calls to oust the chairman and accelerate a search for a new CEO. Ackman, as you may recall, was at first credited with bringing in, as CEO, the former Apple retail whiz Ron Johnson. Now, Ackman gets the blame for that choice since Johnson's tenure was widely regarded as a disaster. He was replaced this spring. Now, some board members now think it should be Ackman's turn to leave or at least shut up. Now, late word this afternoon that JCPenney and Ackman are reportedly in talks to resolve the dispute.
It's a story we've been hearing a lot lately, whether it's JCPenney, Blackberry, or Dell. A company that was once the darling of Wall Street falls from grace. Why does that happen, and what are the warning signs for investors? We turn now to Bill George. He's the former CEO of Medtronic and currently professor of management at Harvard Business School. Bill, I'm sure this is a situation you've seen a lot where investors just don't spot the signs that a company that was a superstar company and stock gets into trouble. What are the warning signs? What should investors look out for, and how can they guard against their investments?
I think the first thing you have to look to is the leadership. Is the leadership on the cutting edge of technology and market changes. BlackBerry's a tragedy in the making, and I've seen it coming for a couple of years because the management was very parochial, as was the board. I love Canada, but they're all Canadians. They were not diverse. They didn't spread out into Silicon Valley, and they didn't partner up. It's a small company. How are they going to compete with Apple, Google, Samsung, these really big folks out there? They had the generic product. Everyone called their smartphone a BlackBerry, but they really lost it, and they're in a fast race, and it's almost impossible for them to catch up now. Very similar situation to Nokia, who's a Finnish company. Also, great engineers, but very turned inward, not in touch with the market changes and the technology changes. And these companies that don't have leaders who are really reaching out and engaging the changes and being very much on the forefront of change are going to lose out, and they're going to cost investors a lot. So I think you have to look first to the leadership of the company and its board. Is it going to be on the cutting edge? Is it going to make the moves in advance? Don't look at quarterly earnings. They'll really mislead you. But now the companies are in trouble, and it's on life support.
This is something that is not, Bill, just endemic in technology, but it sure seems like technology is where an awful lot of these swoons take place. You mentioned Nokia. Motorola had the commanding market share in the cell phone business. Yahoo was a commanding player in search and on the internet, and now it's playing catch-up. Is there something about technology that makes those kind of companies, so much more prone than, say, drug or medical devices where you made your career, or media?
It's like trying to get on the bullet train in Japan, Tyler, and it's moving so fast you can't get on. And if you get off, it's hard to get back on the track. And that's what's happened here. It moves fast. Google just went right by Yahoo. I hope Marisa can bring it back. Investors seem to think so, but it's a long shot. Nokia had it made. They were #1, and they've lost their position. And I don't see them coming back at this stage. But Tyler, you mentioned JCPenney. It's not just technology. Here's a company that for a decade or two was asleep at the switch, but they tried to do it too fast, and they didn't put the things in place like Target did to always be fashion forward, be ahead of the game, figure out where their consumers are going. So it's not just technology. Yes, that moves fast, but so does retail. And unless you're ahead of the game in fashion, ahead of the game in technology, you're going to lose out. And that's a leadership question. I served on the board of Target for 12 years. They were always way ahead of JCPenney and thinking about design, thinking about creativity. And then an activist comes in, wants you to change it overnight like Bill Ackman did. It can't be done. You really have to have the leadership that's planning out your technology moves.
We just have half a minute left. I want to ask you this, since you have such an eye to spot these kind of situations. What companies out there, technology or in any other field, do you see that investors still are in love with them, but they're headed for trouble?
Well, I worry a lot about a great company, Microsoft, because they're so dependent on Office and Windows. And I see a lot of some of the same tendencies that IBM had. And one of these days, that big balloon is not going to be there producing all those profits. And they're going to have to stay on top of the game that Google has and start investing. Now, to their credit, they've been investing heavily in things, but they've missed so many of the new things coming along. And I think you have to create an environment that's really open to new ideas and creativity. We had to do that at Medtronic, and that's the key.
And you were a success there, very much so. Thank you so much, Bill, for coming on the program. Bill George, professor at Harvard Business School. And still ahead, it's faster than an airplane and cheaper than building a freeway. It's the Hyperloop. We'll tell you what it is and whether this travel system right out of the Jetsons is something we'll be using one day. But first, let's get a check on how commodities, treasuries, and currencies performed today.
Mexico is doing something it's never done before, proposing that private investors be allowed to put their money into the nation's oil industry. Mexican President Enrique Peña Nieto is looking to lift a decades-old ban on private investment in the state-run oil industry. The new proposals aimed at boosting sluggish production would include profit sharing with foreign investors, which is currently prohibited by Mexico's constitution.
Here at home, some good news about gasoline prices. They're down about 8 cents a gallon nationwide over the past 2 weeks, and that's even though the high-demand summer driving season is just about hitting its peak. The weekly Lundberg survey of pump prices around the country says the drop in prices is due to refineries that are overproducing gas right now, so they're cutting wholesale prices.
Construction of California's bullet train has been delayed. It was one of the nation's largest shovel-ready public work projects, announced under President Obama's stimulus plan 3 years ago. Construction was supposed to begin in 2012. Now officials say it could be delayed until 2014. Experts say the challenges posed by the $68 billion project were underestimated.
Well, here's another super-fast transport system in the works. Tesla founder Elon Musk, the man behind those all-electric sports cars, unveiled today plans for a high-speed mass transportation system that he says will be able to move people from Los Angeles to San Francisco in less than 30 minutes. It's called Hyperloop. And Phil LeBeau's been covering this story. He joins us now from Chicago with more. Phil, it sounds like just the kind of thing I would like to ride on.
You know, it's a pretty interesting proposal, Susie, and actually it's a 57-page proposal that we just had a chance to review. There aren't a whole lot of details here in terms of what the system would look like, but enough that we can get a sense of what Elon Musk is proposing. He's not going to say he's building this, but this is an idea that he has advanced out there, particularly relevant given the high-speed railway discussions going on in California. Here's a vision that Elon Musk has of the future. These capsules would contain up to 28 seats and theoretically possibly even be big enough for people to drive a car onto them. So how would the Hyperloop work? Well, essentially, it would be ideal for cities within, say, 900 miles. He used San Francisco to LA as a perfect example. It would be a double-barreled tube built along highways. Highway 5, largely very straight, would be a perfect example for this. And the capsules, again, would carry up to 28 people. He says the total cost here, if you were to build the Hyperloop between LA and San Francisco, about $6 billion, amortize that over 20 years. He says that it would easily pay for itself very quickly if everybody getting on were to be charged, say, $20 for a trip between those two cities. A lot of interesting things in this proposal, Susie and Tyler. It's possible that Elon Musk might build a prototype, but he says he does not have the energy right now to build this into a company. It's just an idea at this point.
We just did a story on the bullet train or the high-speed train in California, something $68 billion, so his price tag of $6 billion. This does not ride on rails. How does the capsule go from Los Angeles to San Francisco?
You're essentially riding on an air cushion, if you will. You're going to have an electric conduction motor with each capsule that gets you up to speed. You could go up to 800 miles per hour. You slow down if you have to take a rather sharp turn, or as you're coming in, you recapture that energy when you get to the end. He says that you can build this system with these tubes essentially to withstand earthquakes and other possible problems, such as a tube getting a capsule getting stuck in the tube. But the idea here is that you're riding on that air, and he says the G-force, Tyler, would be no greater than what you would experience in terms of riding on a roller coaster. So he says it would not be one of those where you're like, whoo, I'm going 800 miles per hour.
All right, Phil LeBeau, we'll wait and see on that one. Thank you very much. So we asked you, would you ride in something that could go as fast as 2,000 to 4,000 miles an hour? Here's what some of you said.
A little sketch, but they wouldn't build it if it wasn't going to be safe.
I love Elon Musk. You know, I think he's a genius, so I would go with what he's doing.
My take is with every new technology, there's a little bit of fear and apprehension, but for travelers, if it can get you there, if this train can get you there faster, more comfortably, then it's something that is good for everybody.
Me up.
You go on it?
I'm ready to go.
I'd go, I guess, but it's going to be way down the road.
I'm a little claustrophobic, so I'm worried about that tube part of it, but I like getting someplace fast.
Yeah, that's a good idea. All right.
That's it for us. Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for watching.
And thanks from me as well. I'm Tyler Mathison. Have a great evening, everybody. We'll see you back here tomorrow evening.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a nightly business report news brief. Struggling smartphone maker Blackberry is exploring whether to put itself up for sale, partner with another company, or go private. On Wall Street today, stocks were little changed. The Dow lost 5 points, the Nasdaq rose almost 10, and the S&P down about 2 points. The government reported a $98 billion budget deficit for July, putting the U.S. on track to post the lowest annual budget shortfall in 5 years. Apple shares ended nearly 3% higher on reports of a new iPhone being unveiled next month. Dole Foods was taken private for $1.2 billion by its chairman and CEO. And gasoline prices fell 8 cents a gallon over the past 2 weeks because refineries are producing too much fuel. Be sure to tune in to Nightly Business Report right here on your public television station.